Hello and welcome to Trading 5 Talents. In today's video, I want to update my Iron Condor strategy by improving the risk to reward ratio. And so I'm going to be referring to this as the 10-3-7 Iron Condor strategy. So again, the overall goal is to increase or improve the risk to reward ratio. Now, in my previous iterations of this strategy, the risk to reward ratio was like a 6-to-1 or 7-to-1. So, one loss could wipe out 6 or 7 wins. And so I didn't think that was very good. So I want to do something to improve that. And that's what I'm attempting here. So with that being said, you're going to get a better return on capital. So in this iteration, it's going to be about $36 versus $21 of my previous strategies. And I'm looking for 10 deltas. So that's how I'm going to improve the risk to reward. I'm actually going to have a lower chance of profit, but I'm going to increase the premiums that I'm getting. So 10 deltas on the short strikes. And then because this is a 10-3 strategy, the widths of each wing are going to be 3 strikes wide. I'm entering Monday, Wednesday, and Fridays for my testing, and then I'm going for a 7 DTE. And so this is not going to be every 3 days or every 2 days. It's going to be weekly. And, now with SPY and the Qs having daily expirations, I suppose you could do this every day, but when I was testing it, they didn't have the dailies, so I'm still doing Monday, Wednesday, and Fridays, but I suppose it could work for every day of the week. And I'm going to enter for approximately 48 cents in credit. Now, it's not always going to be that amount that you're going to get for this Iron Condor, but that seems to be where anywhere from 48 cents to 50 cents, I think, is what I'm getting. And now I'm going to be exiting at 75% max profit. So there's a lot of changes here compared to my previous iterations. Again, I'm improving or increasing the premium that I'm receiving. And I'm also going out weekly and I'm exiting early. So I'm not waiting until these expire. I want to exit at 75% max profit. So if you're receiving 48 cent credit and you exit at 75% max profit, that gives you the $36. So that's the ROC, $36 versus the $21 that I was receiving previously. And once again, 10-3-7, 10 delta, 3 strikes wide, and then 7 DTE. So let's look at the chance of profit once again. So this is a basic Iron Condor setup. On the call side, 90% chance of profit. So that's approximately a 10 delta for the short call. And then you purchase the 3 strikes further out of the money. And that's going to give you, again, that 10% chance that it's going to expire in the money, or a 90% chance that it's going to expire out of the money, which is what we want, because this is an Iron Condor. We're selling premium. Same thing on the put side. And so if you subtract those two 10% on either wing, this is going to give you an 80% chance that this Iron Condor would expire worthless, and you'd get your max profit if it went until expiration. However, even though it's only an 80% chance of profit strategy compared to the 90% chance of profit in my 5-3 and my 5-1 iterations, since we're exiting early, I think this might actually increase the chance of profit, increase the probability of profit, because we're not holding it until expiration. We're actually going to be exiting early. So we'll see what it looks like in the testing, but that's the idea. All right, so let's take a look at the profits and losses. Again, profits are going to be around $36 per Iron Condor, entering for 48 cents, exiting around 12 cents. So that would capture 36 cents in profit, or $36, which is 75% of the maximum profit you could achieve from this strategy. So when I have been entering these, I've been as soon as I enter the Iron Condor, as soon as I sell for 48 cents in credit per Iron Condor, I immediately place a good till canceled close order for 12 cents, or whatever 75% of the max profit is. So because this is a 3 strike wide Iron Condor, it's going to require $300 per Iron Condor. So 36 divided by 300, it's going to give you about a 12% return on capital. So again, these are small but consistent profits, high chance of profit. Your selling premium, so your theta decay is working in your favor. The amount that you're getting per Condor is small. I mean, it's $36. It's not a home run type of trade, but again, these base hits really do add up. So I'm never looking to take that potential max loss, which would be about $300 minus $50, let's say. So that would be about a $250 max loss, which I don't want to take. What I'm going to do is I'm going to take my actual max loss, if possible, when the underlying price touches one of the short strikes. I determine that loss using option strat, and in my other iterations, I've shown how I look at that and how I figure that out. So I'm not going to go through that in this one. So when are we exiting this strategy? Well, 75% max profit, and that's the good till canceled close order that I'm initiating as soon as I enter this Iron Condor. So it reduces the auto close risk, which is what I was experiencing with the 5-1 and the 5-3 strategies, because I was holding those until expiration. And, at 3 p.m. Eastern, or an hour before the market closes on expiration day, there is that risk that that one of the sides of the Iron Condor will be closed by Robinhood to mitigate the assignment risk. So I'm trying to get rid of that in this version, and that's why I'm exiting early. But in order to exit early, you want to increase your premiums to make it worthwhile. And then to increase the premiums, you need to have higher deltas. So I went from a 5 delta to a 10 delta to increase my premiums. Then I can exit early and still make a good amount of profit per Iron Condor. And I believe this would increase the win rate. Right now, it's projected to be 80% win rate. But if you exit early, maybe it increases to something greater, and that would be good. So we'll have to take a look at the final results. So be sure to subscribe so you can get notified of when the final results video will be posted for this particular strategy. I'm also entering the next Iron Condor before the current one expires or before I exit the current one. So I'll be in 2 Iron Condors simultaneously, and these are $300 per Iron Condor. So you would need at least $600 to run a strategy like this. Obviously, that's going to require more capital. So you can exit early for a loss, and we talked about that when the underlying price touches the short strike. Again, that's just what I'm doing for my testing. You can exit at any time you want. This is not financial advice. This is just me sort of documenting my journey on finding a nice, profitable, consistent, and sustainable Iron Condor strategy. So I'm exiting when the underlying price touches one of the short strikes of my Iron Condor. And the actual max loss I'm finding based on my initial testing and also from option strat is going to be about $91 per Iron Condor. Now, the potential max loss is around $250. If you just let it go to expiration, it expires in the money. $250 would be your potential max loss. But if you're exiting when the underlying touches one of the short strikes, then it should be around $91. So if you're going to win $36 and lose $91, again, this is drastically improving the risk to reward ratio that I had in my previous Iron Condor iterations. So here is why I like this strategy. So there's still a high chance of profit, 80%. Hopefully it can be increased if we're exiting early. Again, consistent winners, which I like. It's good for your trading psychology. It's pretty passive. As soon as you enter your trade, you put in your take profit order and you just let it ride. There's a higher rate of return on these trades than in the previous strategies, so that's also a bonus. And again, because I'm only trading SPY in this particular case or the Qs in my other testing, there's only one ticker to track. You don't have to track multiple stocks. And then once again, exiting early reduces that auto close risk and hopefully will increase the win rate of this Iron Condor strategy. So what is not to like? Well, again, Iron Condors, they're 4-legged trades, so you're going to have to pay commissions. You're exiting early. You also have to pay commissions on that. So that's a real big disadvantage if you're paying commissions on your trades. Once again, as with any iron condor strategy, you want the underlying to stay within a range. Any black swan event, like the binary events that have been sort of increasing lately, during our economic environment, could result in a potential max loss, so the full loss because you have a wild swing in the market. And it also requires more capital because you could be in overlapping iron condor positions. And, again, that would be a disadvantage in pretty much any type of strategy. So the more capital you have, obviously, the more you can trade with and the more potential wins, also potential losses. But again, those are some of the disadvantages that I see. So I've done my testing on this already, and so I'll be posting a video of all the results of 10 trades that I've made using this 10-3-7 iron condor strategy. And if you would like to be notified of when that video comes out, then please click on the subscribe button and then turn on the notifications. And if you have any questions about any of my iron condor strategies, this one in particular, or about selling options in general, then please go ahead and leave a comment down below, and I'll try to answer it as quickly as possible. So until next time, trade wisely and take care.